Scott Groves with another mortgage mystery. What is an interest rate lock, or commonly referred to as a rate lock? Now, this is a very confusing concept in the mortgage business, and it's something you need to talk to your loan officer about, or be working with a loan officer who you trust to be keeping an eye on the market for you. Now, here's what happens. Once you get pre-approved to buy a property, you're out there making offers, and you get an accepted contract. On the day that you get the accepted contract, you are eligible to lock in the interest rate on your mortgage. Now, this is going to be a discussion for you and your loan officer, and there's a couple things at play. One is your psyche as the borrower. If you're the type of person that says, hey, today, the day that we go under contract, the day that we get an accepted offer, the rate is acceptable to me, the payment is acceptable to me, I'm not a gambling person, let's just lock the rate and be done with it, that's something you can absolutely do. If you're a little bit more of a gambling man or a gambling woman, you can say, hey, Mr. and Mrs. Loan Officer, what's going on the kind of overall financial picture? Should we lock in the rate today, or should we float the rate for a couple days and see what happens? Now, any quality loan officer like our team is going to pay thousands of dollars a year to a bond tracking service or a mortgage-backed security service, which basically monitors all this stuff behind the scenes and gives us loan officers cues as to when we should lock in your interest rate. So let's say, for example, you go under contract on a Monday and you have a 30-day contract to buy a house. You've got about 2 weeks to 20 days before you have to lock in the rate. Because at some point, you have to lock in the rate. It is what it is, and we got to close the deal. A good loan officer, like myself, will contract with somebody who gives daily updates and says, hey, Scott, we don't really like the jobs report that might be coming out on Friday, or there's some financial news that looks like interest rates are going to move against us, aka they're going to go up. If you have clients that are going to close in the next 30 days, let's just go ahead and lock that contract, lock that interest rate, and be done with it. I'll convey that information to the client, and then we'll decide to lock in the interest rate and go from there. Or those daily updates might say, hey, we're really excited about kind of the financial news coming up over the next 3 or 4 days. This might put some downward pressure on interest rates, and we should float the interest rate, meaning it's not locked in, over the next couple of days to see if we get some downward pressure and you're able to lock in your clients at a lower rate. Again, I'll have this conversation with our clients, but I'll also let them know that sometimes things move against us unexpectedly and I don't have control over the interest rate markets. It is a little bit of a gamble. So this is a conversation between a loan officer and a client. It's all about the client's comfort level. A good loan officer will give you some cues on what they think you should do. And then once you lock in the rate, it's done, right? It's kind of like buying a stock. If you bought stock yesterday, you bought Apple stock for $300, and today the stock is higher or today the stock is lower, doesn't mean you made a bad decision or a good decision. It just means on the day you locked in, the rate was, or the stock price was what it was, and then it'll fluctuate from day to day after that. So I tell clients, let's have a conversation up front. Either let's lock in and be done with it, or trust me to float the interest rate, and I'll let you know when is a good time to lock in the rate based on this data I get from people I pay for the data from. And then we can go in that direction, right? But whatever you do, whenever you lock in, it's done, it's over, we're good. We know we have a payment and an interest rate we're comfortable with. We're going to close the deal. And the reality is, from week to week, which is kind of the timeline that you have to keep an eye on interest rates rarely fluctuate more than about 1/8%. So if your initial disclosures say that your rate's going to be 3%, you'll be somewhere plus or minus 1/8%, 2.875, 3, 3.125, not really enough to damage the loan or make you not want to be a homeowner. I've had clients that get very stressed out about this, and then I go over the math and I'm like, hey, if we lock in at 3 and it moves to 2.875, we're really only picking up $25 a month on your monthly payment. Yes, would I prefer you to have that $25 in your pocket? Of course, but is it really worth the stress of just in case the rate goes up and now you're losing an additional $25 a month? So these are the conversations you need to have with your loan officer. If your loan officer isn't having this conversation with you and they're not educating you about what rates are doing and the difference between a rate lock or a rate float, then by all means, give us a call, shoot us an email, put some time directly on our calendar with the link below. We would love to help you get approved, have this conversation, and be ready to help you once you go under contract. Our team is licensed in 12 states in the United States, and if for some reason you're buying in a state where we're not licensed, we can refer you to another quality loan officer who will be great at this kind of education to help you get into a home comfortably at a rate and a payment you can afford. If you found this video at all helpful, do me a favor, it helps our algorithm. Click the like button, leave a comment, subscribe to the channel. Scott Grove's Mortgage Mysteries. Leave us a comment or shoot us an email if there's any video that you'd like to see that we haven't yet addressed.